Are we going to
Good
bring?
morning.
Oh, there he is. I was going to say, are we going to bring in Nick live? I guess we are. You snuck in on us there, Nick.
You're late, so what else is new? I was traveling back yesterday. I just got in like a few hours ago.
Where'd you go?
Cancun.
Oh, nice. Did you take the family or just the wife
Yeah,
or
yeah.
the
No,
girlfriend?
no. Everybody. No, took the family. It was good fun. Good fun.
Okay, you sound a little bit tired, but we'll fire you up here on the show. We got a great question earlier about from Yayo. He's a novice options trader, and he hears us talking about open interest. And I know that's something that you like to focus on. Could you just give us a breakdown of how you interpret open interest?
Sure. It's in theory, the open interest is basically where trader. It tells me where the option traders are looking for prices to go. And I assume that the market wants to screw everybody, and prices will tend to not go where they want to go in volume. So if there's open interest, say a lot of puts open at a $10 level or something, I would be comfortable hiding below the $10 level. So I will use it kind of like a sand barrier. This is how I interpret open interest, and you have to look as to where the price level is going, it's trading, and also where the time frame is also important. So it's not an easy look at it. You say, okay, I see A, then B must be that. It's just it's a big picture, a big window that I have open when I'm looking at the open interest, but the data is actually the number of contracts open at a different strike prices. For example, Cisco, you guys mentioned, and you like it on the upside for 26, but if I look at the open interest, 25 looks like a strong barrier for it to cross. It would really need a good reason to cross it and stay there.
And where do you
So,
get your
so you,
data from here? Yeah, I was actually asking, where you get your data through various brokers. What platform,
The,
or do you pull off multiple platforms?
This is the easiest open interest. It should be available in all options trading platforms. You open it up, you click on the actual contract in question. So if you're looking at this week's, and it should be right there, a column you probably need to choose as one of your preferences inside the platform to show OI or open interest or whatever they call it there. And it should show you a count, and it's a static count for the day, and they update it overnight.
And this is really more relevant to the weeklies, right? When you're looking at when they're pinning on the weeklies, do you put as much emphasis? I mean, you use this for short-term events. You're playing the weeklies, and you want to see if you're going to run into trouble in a particular area. Maybe like you might not be that interested. Let's say in the Apple, November calls
No,
right now,
no.
right?
Exactly, and I can answer that specifically. I use it to guide my daily trades and setups. This tells me what the market expects today based on what they know and this based on what's in the headline today. It won't tell me where the market is going to go in September if I'm looking at a September contract, but it tells me, it gives me an idea of expectations unless a major move happens. So I was looking into a September trade yesterday, and somebody said, "Well, aren't you worried about the September open interest?" I said, I'm not, because they're all lined up here. So in theory, they're expecting this within the next few weeks, and today they're expecting that. So I combine the two, and I can say, okay, now I have an overall picture. So macro, I use the longer term, but for actions right now, it's only the short term, day to day. That's why I update it daily and I send it out to the members in an email, so they don't have to do that. It comes in an email, they open it up, it's right there.
so when you were saying with the Cisco, just so I'm interpreting that, when you're saying the 25 is high, you're saying that it's not likely that the stock will go below that. That's what the open interest is saying.
I see 25. I see over 50,000 contracts of calls at 25
Oh,
for
if the calls,
this
okay.
week.
Yeah.
Market makers are not going to want to lose money,
So they might keep it under 25.
right? Or at some point, if it pops over, come back to 25. So I use the information differently. So right here, I see it's tougher upside than downside. On the downside, it's half as many at the 25, but then you have another line behind them at the 24, so it's almost an even fight. So if I were to lay money on this, the range is 24 to 25.
So you're looking for them to miss then a little bit then, huh?
I'm not judging their performance. It's because earnings, I've said it many times, is just a coin flip on how the market
Okay.
reacts to them.
And
They could beat whatever. They could find something they didn't like and done.
Well,
and
we saw
it
that already.
yeah.
We saw a lot of stocks on good earnings reports pop initially and then just kill them. You know, Kate was one yesterday. That was an absolute incredible example of that.
And if you do get a pop, and this is kind of like when I had those Twitter calls and they were weeklies, and you got the pop up out of earnings, everyone that's on those 25 calls, if this thing pop, if some stock like Cisco makes a big pop, 40, 50, 60 cents in pre market trading, the people that are on those 25 calls most likely are going to be selling stock to lock in the gains.
Right, and then at a certain point, if the next day I can still see that, then it might be a reason for me to buy a lotto put, because at some point they're going to be cashing it in, and it's going to be downside pressure, and at least for a moment, it's going to revisit close to 25 and to wash it out.
Nick, wanted to get your thoughts here on Priceline. They reported earnings there on Monday. It had an inside day yesterday after the earnings report. We've got Stifel coming out here this morning, giving the stock, reiterating the stock with a new buy recommendation, putting a $1,600 price target on it. What are your thoughts here? Are you in agreement with Stifel? Can Priceline go to 1,600? Or what are your
No,
thoughts?
I don't agree, because I obviously sold the 1500 January call several times this year naked, which I usually don't do.
Oh,
Uh,
naked. Whoa, whoa, whoa. Nick, you're always about the credit spreads. You don't sell naked.
Yeah, but I sold it for 45. I told you about it. I sold it for
Yeah, I remember
45 and
that. But I
bought
thought
it
you would
back
have
for
bought
like
an
20
upside
something.
call with it too to protect
No,
the spread.
and then I got scared now. And then I did it again a few times. Only I did the spread a little bit higher than 1500, and it worked out okay. I was hoping they sell the hell out of it after they reported, because I was ready to sell some puts in it, long dated puts. Right now, I am shorted via small debit spread puts, and it's little green. I'm comfortable with it. I'm expecting a little downside or a big rip. So if it does a little downside, then I'll cash in the debit put spread and I'll put some sort of an iron condor on it. And if it does a rip and I lose money on the puts, I'll sell calls against it aggressively, because I don't think anybody has a reason to go to 1600 for the rest of the year here.
Let me ask you something. When you do, like when you did that, when you sold that call in the price line at 1,600 call, it was a leap, right?
Yeah, it was a leap, 1500 January.
Okay. And do you wait for it? Because I know those things sometimes can be illiquid. Do you wait for it to go bid at the price you want, or do you just stick an offer out there and say, "Come and get me"?
It's so crazy. I usually start at the mid whenever I'm doing something
Yep.
that's tightly at the middle between bid and ask. I really don't care where the market is. If I get the middle, that's perfect. If not, I'll move it up a few pennies here and there until it executes, and I'll leave it open. And some trades don't come in. If it doesn't execute within the parameters that I like, within enough premium for me to like it, then I'll move on. I'll do it some other day.
You'll just leave your order out there, or will you
I'll
adjust it as the price of the stock is moving around?
I'll leave it open for a little bit, and if it's catching no action, I'll adjust it a penny or two, one way or another, depends on how the market's moving. So if the market
Right.
is moving up, then I won't adjust it. Chances are it's going to move up enough to where somebody will say, "Hey, I'll give that guy a shot,"
Right.
and I'll do it. And usually on something that doesn't here's a little tip. I know some hardcore traders don't like this. I don't restrict the order with all or nothing. I feel that if I do, then it doesn't happen. I don't mind with a partial order. So I'll leave it open, and if one contract gets executed, or two or three, then it drives the price towards that mark I have. So I just leave it open. And if I rarely get partially filled. It's usually the stuff that's way out of the money that I'm trying to close for pennies. That's a
Do you go so you go GTC or something like that, or you just try and
No,
work it?
no, no. I don't like those either. I got filled last week on one of those by mistake.
Yes.
Like, uh-oh, I forgot to close them.
Who put that order out there?
Yeah, because Priceline all of a sudden pops $30. You're sitting GTC from yesterday, and you're out to lunch, and you get picked off. So yeah,
Yeah,
don't
no,
use GTC orders on options, folks. I don't like
no,
that either.
especially when I'm sitting at the platform all day. I mean, why would I want to do that?
With sometimes with like when I like going into those weeklies, I'll put a bid out there a few times, and then immediately they'll go, like just a tick in front of it. So a lot of times what I'll do is I'll just cancel the order, because the weeklies, like in something like Twitter or Facebook, they're all run by the bots, running on
Oh
fair
yeah,
value.
entirely.
So sometimes if I can't get filled and I think I should be filled, I'll cancel the order and then wait till it goes offered at the price that I want, and then then you just then you're in. You don't have to wait, because it's frustrating sometimes when you go in there, bid 140, and then you see 141, 142, and it's like, hey, I don't know anything. You should just hit my
Yeah.
140 bid and get me out of there.
Here's an example. Last week I did. Last week, yeah, I think it was last week. The days are, margarita. Never mind. Last week I was. I opened a trade for the portfolio when I was on vacation, and it was a debit, a credit put spread. So it's a bullish trade on a ticker, and I said, okay, it's a December trade, so I'm not. That's part of the things I was gonna say today. So anyway, out of trouble, far and away out of the money, and with about 10% buffer from current price levels. So I said, okay, I don't care if I collect $1.70 or $1.60 or $1.50. I'm gonna collect a whole bunch of money on something that's likely not gonna lose money. So I put the trade out for $1.70, where a little higher than the mark, just in case the premiums were funky. And I waited, nothing happened, and then I dropped it down to the mid, and it executed at the mid. Now I had a member who said, okay, I left my order at $1.70. He didn't adjust. He didn't get in. I closed the order the next day for $1.10. So I kept the difference, and I had a profitable trade, whereas he missed out. So the moral of the story is, it depends on how crucial I want the $1.60. Or the $1.70. This time I said, okay, I'll give up 10 cents to get the order, because it seems like a slam dunk for me, and I
Yeah.
did. So he should have done the same. Well, he didn't know enough, so I'm not faulting him, but I'm just using it as an example. So I sometimes give up a little premium for a winning trade, and I don't care if it wasn't ideal. Rarely do you get ideal trades.
This is a great point you're bringing up here, Nick, and this is something I try to stress to our traders at Bright Trading there, on even in this high frequency trading world. Like Joel was just saying, they do penny jump you, where you'll put a bid out there for $1.40, they'll go $1.41, $1.42. A lot of times you'll sit and you'll miss an execution trying to save yourself that penny or two. I always say the penny or two is like the high frequency trading toll. If you want to trade in this market, you kind of got to pay the high frequency trading toll.
I like that.
If you don't pay that penny or two toll, then you might miss an execution, and those pennies that you're trying to save could actually turn into dollars in missed trading opportunities. So I'm a big fan of, and there's a case to take liquidity, and there's a case to provide liquidity, but I'm a big fan of don't miss a trade to save a penny or two.
Yeah, and if you're trying to play the premium game and trying to beat the big guys, you're deluded. In my opinion, I accept that I'm a small fry, a small fish swimming in a big ocean of sharks. I swim close to the rocks, and I really don't care if I'm getting a nickel and dimed here and there. It's part of doing business. So I'm okay with it, and it just makes life easier.
Hey Nick, we've had a nice rally here off the lows. The SPOO's hit 1890 and a quarter when you're on vacation, and we've had this nice pop up to 1941. Monday side 1941 was actually just matched here during the pre-market session. I've been talking all week about the 1938 level, because that represents a 50% retracement from the highs down to the low. I mean, that's what I like to use as my bogey. I looked at your recap from yesterday, and you were just very, you weren't making a call yet. You weren't bullish, you weren't bearish, you weren't banking on any overnight positions, based on the activity that you saw. We are getting a nice pop up here. Like I said, we hit 1941. We're pulling back. I mean, what do you use here to, what would give you confirmation that we're running back up just to rip and take out those new all-time highs, or this is just a little bit of a recovery bounce, and maybe we got some more work to do on the downside?
Given what I know from the last couple of months, I would almost bet my life on we're not in the mode of running back up to all-time highs and ripping right through them in a major way. Just because you said it, I think, Dennis, this morning, sell the pops, because they have been relief pops of some sort, either
Yeah.
relief that we didn't get bad news, relief that she didn't say I'm cutting rates tomorrow or raising rates tomorrow. So they've been relief of lack of headlines or something. It hasn't been a fundamentally driven pop. So until I start seeing reasons to rally, um, then I'm just tempted to sell the pops and buy the big whooshes down, because there's also no reason to panic. Yes, we have the makeup, but fundamentally, really nothing has changed. Absolutely nothing has changed. We're still in a slow, sluggish recovery. We still have headlines looming. We still have the same situations going on. I mean, the Middle East has been a mess for thousands of years. I know, I come from there. And you've got the issue in Russia. It's a local struggle, and I doubt anybody of the big guys want to make it a global struggle. I know they talk like it is, but it's not. It's a local struggle. So ISIS now is just the topic du jour, or the la semaine or something. So it's these are all symptoms of underlying issues that have been with us for a long time. So the wishes, the drops will be bought eventually. I don't like the fact that the S&P has not recovered the big wish from 731 area time. It's halfway through that slide if you pull up like a 20-day or a 10-day. Whereas same deal with the small caps, although small caps is a little bit better in that sense. However, today's pop is not led by the small caps, so I'm hesitant to follow it. I will wait it out, like I did yesterday. So chances are I'm not going to miss anything.
I think I agree with you too. Just obviously, I wrote that article about a week and a half ago, just talking about all those individual stock pops, and we continue to see it happen here. It seems like almost every day, stock reports good earnings, and they're selling the pops. So if they're doing it on the individual stocks, it's eventually could start to flow into the overall market.
And here's a stock pop that I've said before will be the short of the lifetime. It's Tesla. It's a car company. It's a car company, and people are surprised when, like yesterday, they had the news of, oh my gosh, it's got issues. It's a car company. If you're gonna if you're gonna mass produce cars, you're gonna have issues, and people are expecting a perfect car unless he completely redesigns the car or introduces some completely changing concept for driving. Google has done it like 3 times in the last 2 years, and nobody talks about that, with like driverless cars and people sitting in the car taking pictures when they're not driving. This is amazing to me. Whereas it's an electric car. What does it do? It looks cool. It goes fast. It costs a lot of money, and people like it, but it doesn't change the game. So until he changes the game in the car industry, it's a car company. Pull up the chart if you have it. I'm looking at it. It's like, oh my gosh, if I were to blindly short a stock without a name based on technicals, this would be it. Via put spreads, not sell it short, because I don't want to fight the idiots. It's just, pops that are not fundamentally driven, I'm selling. And Priceline, I believe in the company. They crank out a lot of money, but sometimes it runs too far, too fast, as they say. And I like to sell the credit call spreads in it and let time do this job.
Okay, we've had Nic Chahine on, MarketFi maven and author of Create Income with Option Spreads. I encourage everyone to check that out on marketfi.com, along with several other great trading products. Nic, if we missed you, we're glad you're back. Glad you had a good vacation. Get a little bit of rest, and we'll speak to you again next week.
Thanks, guys, for the invite. Talk to you next week.
Okay.